Well, it's time to shift focus to the policy, and we have Aastha Gudwani joining us, India Chief Economist at Barclays, and we also have Aurodeep Nandi, Dr. Aurodeep Nandi, India Economist at Nomura, joining us. Pleasure having both of you. Let me first start off with Aastha. Aastha, give us your take. I know that there is a certain set of your colleagues who are to some extent looking at a possible rate cut. What's your take, and what's the rationale behind that? Give us your quick view.
Thank you, everyone. Good morning. I am that set of people who's looking at a cut this time. We are looking at a 25 basis point cut by the RBI MPC in about 12 minutes from now. As you rightly mentioned, this is not exactly the majority view, but we have three very strong tenets calling for this cut. The first one, of course, is that the financial conditions have actually tightened since August, and that is in some way impeding transmission to lending rates. If you look at the weighted average lending rate in July versus June, that has actually gone up for outstanding loans. And if these financial conditions do not ease, reflecting the kind of monetary easing that has been done by the RBI, it will be difficult for transmission to play well into the economy. The second one, of course, is on CPI inflation, which continues to undershoot RBI's forecast and surprise the analysts alike. We are now looking at RBI MPC revising down their inflation forecast, which previously was at 3.1. We are looking, our own forecast is at 2.4. The third one for the viewers here, although the growth numbers are turning out to be stronger than most of us expected, the high-frequency indicators do not indicate that kind of robustness, and there still seems to be some slack in the economy. So basis these three things, my sense is that it is better to act now instead of waiting out for some of the fiscal support to play out before RBI undertakes another cut. But that said, it is a very, very close call.
Okay, Aurodeep, I believe Nomura too is of the view that a cut is warranted. Confirm that for us. That's point number one. Point number two is give us a perspective. What this does is likely weakens the rupee further. Do we have bandwidth for that, or do we use Forex for that? What does the RBI do?
So one, yes, we are of the view that there's going to be 25 basis points of cut. There's sort of two questions you need to ask yourself. One is there need for cut, and is there scope for cut, right? And the answer to both is yes, because is there scope for cut? Yes, inflation is really, really low. We've had low food inflation, core inflation is on the lower side. Inflation expectations are low. So this is pretty low inflation regime. So you're below 2% inflation. That's what this quarter is tracking. So you have scope for cuts. The question is there need? And I agree with Aastha. Underlying growth remains weak. Much of the growth pickup that happened in Q1 of FY26 was because of very low GDP deflators, which was kind of amplifying real GDP growth. But if you look at underlying growth, especially in a situation where Trump tariffs are kicking in and we're seeing the impact in industrial production and trade numbers in August, we see that this is the time for coordinated policy action. So both fiscal, macroprudential, as well as monetary policy easing. I mean, as far as Rupee is concerned, it depends, right? Because one, I don't think the RBI will essentially come out and say that they are targeting any form of any particular level of Rupee. To some extent, for exporters, probably a weak Rupee is helping on the margin, tackle the kind of the tariff pressure that is coming across. So I think, money will, flows of money is really not that sensitive on how much the interest rate tweak is. So I don't think that itself is going to be the major sort of trigger. But yeah, generally the Rupee has been pretty weak.
All right, so generally Rupee has been very weak compared to especially last policy, and both our guests currently are saying that 25 basis point cut is expected. Aastha, I want to come to you to understand, compared to last few policy as far as liquidity is concerned, we are in much better position, especially if you compare with the start of the year. What kind of commentary are you expecting on the liquidity front?
Right. So as you rightly mentioned, we have come a long way from the start of this year where liquidity conditions were mostly tight to now easy liquidity conditions, and the CRR cut is still playing out in the economy. There have been some intermittent liquidity deficit episodes, but those were mostly manageable. And you would have seen that the RBI has been very agile in terms of announcing the variable repo rate operations. They just announced a 2 trillion one a couple of days ago. So I think RBI is very hands-on as far as liquidity management is concerned. And if you look at the revised liquidity framework that was announced yesterday, it is becoming very clear that the RBI would like to continue with the existent liquidity framework. The only thing that they possibly may want to do is to pivot towards the 7-day VRR, VRRR operations instead of the 14-day one, which will no longer be the main operation. But I think apart from that, RBI's focus on liquidity continues to be as razor sharp as it were in the beginning of the year, and they are quite hands-on to ensure that comfortable liquidity situation persists, barring these intermittent blips that happen because of advanced tax flows and government spending.
Definitely, I want to understand from you, Aurodeep. Now, when you are saying 25 basis point cut is what Reserve Bank of India governor should do this time, particularly on inflation front, the situation has been quite under control, and also the GST announcements would have helped later. But second half of the year, and as it was projected by Reserve Bank of India, there was an expectation of inflation inching up. Do you think that situation has eased now?
I mean, look, so there's 2 points. One is that, if you're a central bank and there is suddenly, a measure that brings down inflation or brings up inflation, your job is to look through it. So I don't think GST cuts should necessarily be the defining factor behind the RBI changing sort of its outlook. The second point is that the pickup that the RBI is referring to in 1 year ahead, it's coming on a really low base, right? So now your inflation is like 1.7, 1.8%. So the above 4% inflation is coming on the base of this. I think it is important in these situations to look at what the underlying inflation trends are, which is that core inflation has remained low by whichever measure you would like to look at for an extended period of time. We've had healthy monsoons, so even food inflation should be capped. We are also seeing, Chinese imports cheaper coming into the country, which is also helping keep prices down. And then you have, of course, the GST impact. I mean, we're going to see it probably in the October and November numbers, how much the transmission has happened from the announcement to the actual CPI index. I mean, the number we're thinking of is around 30 to 40 basis points, but, let's see how companies have passed that on. So, you put all of these together, and for a central bank, right, when you're cutting, the key insecurity you have is that, okay, I shouldn't be cutting too much and in the process raising inflation risks. And we think that the risk of that is really low because underlying inflation pressures are pretty low.
Just trying to play devil's advocate here and, and try and get a view from Aastha maybe. Aastha, the take likely could be that they've already cut 50 bips. They've given visibility for the next 6 months. GST cuts have just come through. There's a bit of wait and watch also, which the central bank could possibly play. And there is also a risk on the fisc. So how should one play both of those from an RBI perspective?
Absolutely valid question. And as I had mentioned earlier, it is indeed a very, very close call. So the chances of the RBI MPC to deliver a dovish pause and delay the cut to December are quite high. The reason that we still think that an October cut is better timed than a December cut is because the inflation profile is extremely supportive to be able to justify a cut right away. As you move into December, you may be starting to see slightly higher inflation going forward. And if you do want to cut, timing is important. And I think October makes a lot of sense, especially when you're going to add on to the government's efforts to support consumption. We all know we are at the cusp of the festive season. To have lower mortgage rates will not hurt anybody at the moment. And since my expectation is that the terminal rate for this cycle is 5/4, it's not a matter of if, but when. And I do believe that October is a better timing than December, so that you give that double booster shot to the economy alongside the GST cut. But I completely take your point. Fisk has done the heavy lifting to support growth. It makes all the sense to wait and watch and sequence your actions better. But the time is right now.
Okay. Aurodeep, are you worried about the Fisk at all? Because there's, of course, a large need for growth, and I know I have to let you go, but just this last question very quickly with regard to the Fisk, your view.
Well, I think we're looking at the revenue side of Fisk, and we're saying, oh, look, there's a fiscal stimulus at play. What's also happening is on the expenditure side, there's consolidation that's happening, especially on the revenue expenditure side. So the net fiscal stimulus, we keep saying Fisk is doing the heavy lifting, but actually you also need to look at what's happening at the spending side. And I really don't think that the dynamics are such that, yes, there is a lot of fiscal uncertainty. I think the government is going to be successful in keeping the fiscal deficit target at 4.4% of GDP. So at this point, I don't think, I know there are concerns on Fisk, but I think that the government will probably be consolidating on the expenditure side to keep the Fisk under control.
Okay, you've got new listings. I know this is completely random, right?